Check, check, check. Good afternoon to all of you. I was supposed to start at good morning, but now I think it's good afternoon. And my session was supposed to end by now. I'm starting by now. So I think with the permission of the organizers, I will go for 1 hour instead of 1.5 hours, because brevity is wit. Okay? When you want to have more, you should stop. Then you'll be a very good speaker. Okay? So I'll be going on till 2 o'clock with the permission of all of you, especially the senior, or I should say the junior person. They were saying, sir, is okay? I go up to 2 o'clock, Venkatramana sir. So my session will be on, today is supposed to be the GST day, but I am taking a tangent on income tax. Okay? If you have seen me before, I would always be in a full suit. After I started reading the income tax, can you get me the those two books? You will see that the Income Tax Act as well as the Income Tax Bill is something like this. This is the Income Tax Bill, the size you can see, and this was the Income Tax Act. Okay. So what is the difference between these two? This has gone on a treadmill. It's gone on a treadmill and has become like this. So all that I can tell you is this has become this by virtue of reduction of all the words. So if I have to tell you in one shot, what is the difference between the act and the bill? The act and the bill, okay? This is the act, the Income Tax Act of 1961. I was so happy when Mr. Venkatramana sir said that he started his career in 1960. And this was 1 year after that, 1961. And any act has a life of 60 years. Just like a human person who completes 60ನೇ ಶಾಂತಿ ಅಂತ ಹೇಳಿ ಮಾಡ್ತಾರಲ್ಲ, 60ನೇ ಶಾಂತಿ ಆದ್ಮೇಲೆ ರಿಟೈರ್ ಆಗಬೇಕು. This should have retired in 2021. It survived for 4 more years. I think what we have in front of us is a damn new income tax bill 2025, which will see its life from 1/4/2026. 1/4/2026. So the difference between this and this, A and B, if I may have to call, A is act, B is bill. Okay, for sake of understanding, A is act and B is bill. The difference between the act and the bill, you will see, is only a reduction of words. If I have to say in one word, it is word over Excel. What I mean by that, word over Excel, it is the reduction of words, but nothing reduction in the Excel calculation that we do when we talk about the computation of income. Am I clear? After all, income tax is all about the calculation of numbers, where we have to calculate from the profit and loss account. From the profit and loss account, am I audible? From the profit and loss account. Okay. Let me see. From the profit and loss account to the, I'll have to get into to the total income. So in the entire calculation, which I do it in Excel, there is no change whatsoever from A to B. Am I clear? From A to B, there is no change whatsoever. Then what the hell did they did it? It is something like this. If I have to say, it is word over Excel. It is notwithstanding, becoming irrespective of. You will see that, so many words, they have reduced it in the income tax bill. So let me proceed further. In 2024, Madam Nirmala Sitharaman made an earnest effort to give retirement to A and bring in the B. Retirement to A and bring in the B. For the benefit of those who have joined now, A is Act, 1961 Act, and B is 2025 Bill. So when she said very clearly in the presentation of her February, in fact, it was immediately after the elections. Immediately after the elections on 23rd of June 2024, she went on to say that I'm going to make a comprehensive review of the Income Tax Act 1961, which shall be undertaken for making it concise, as you have seen, lucid, easy to understand, and with the aim of reducing the disputes and litigations. So that is the objective, thereby providing tax certainty to taxpayers. And it will be completed in 6 months' time. So when did she say that? 23rd of June 2024, when this was told, and exactly more or less after 6 months. On 8th of February 2025, the new income tax bill was tabled, was made public. We got the first draft of the 2025 bill on 8th of February 2025, and it was tabled in the Lok Sabha on 13th of February 2025 as a money bill. So what is meant by a money bill? A money bill is one which has to go through the Lok Sabha and it has to be approved by the Lok Sabha, need not necessarily be approved by the Rajya Sabha. Need not be approved by the Rajya Sabha. That's a case of a money bill. So how many officers were involved? About 150 dedicated officers. Hats off to the two officers who spoke. They spoke very passionately about their GST from their point of view. In fact, Mr. Padmakar went on to give so many instances which actually ignited all of us, I'm sure, how to deal from our client's perspective. Very, very good insights they gave. So 150 officers of the department involved. Maybe sometimes when we go to the income tax department or the GST department, we don't see people like them. We see some ordinary people, and that is, we say that, all the people in that side are all not good and theory. But then there are so many dedicated officers who actually work for the country just like you and me, and 150 officers have put in their sweat and blood to make this particular bill. More than 60,000 man hours dedicated towards making it simple. And they have also consulted international tax organizations like the Australian and the UK office. And they have collected various suggestions from the stakeholders, the tax practitioners, the industry, and the officers within the other offices in the department. And they have collected about 20,976 suggestions and classified them. And finally, the new bill came into picture. So the new bill is currently with the Parliament's Standing Committee on Finance, headed by one of the MPs of Orissa, Mr. Panda. I don't know, some of you might have called in as a delegation. The various institutes were called in as a delegation in the month of May. The Chamber of Commerce, the Chartered Accountants Institute, the CMA Institute, they were all called to give their views even after this bill was actually tabled before the committee. So right now it is with the Parliamentary Standing Committee on Finance, where they are also starting to get a lot of suggestions from the stakeholders, and this has to be tabled before the Parliament in the monsoon session. So as I already told you, this is Word over Excel. Vishwanath Bhattji, I am so proud of a Bengaluru becoming the chair of the SIRC Egmore office. I remember, I'll have to tell you this story. When I was doing my ICWA, the then ICWA, it was more a strength of physical strength. If you have to write ICWA exams, 4 days, 8 papers. That was real examination. Now I think it's alternate days. I don't know. Every day? Every day. In CA, it is alternate days. Somehow you pass anta helbittu, they do that. And earlier we had a real examination. So I was preparing for my CA inter and ICWA final, and I went to Chennai, Egmore, and I remember seeing my rank list in the Egmore office. I knew that I will get a rank because of the marks, and these days we get the marks and the rank together, right? Together. Those days, I'm talking of 1991, when the rank list comes after 3 or 4 months after the examination. I don't know why it took so much time. Now I went to Egmore office asking every day. I used to go as rank list banta anteli. Then they said no, May attempt, December and June was the exam. So they said June attempt hakidivi, December nimdu innu 3 tingalu togolutte anteli. Then I went to the branch there, SIRC. Then looking it from the bottom, I was looking at, because coming from Ballari, and I thought, then bottom in the mail, that's where I saw my first rank in the list. So I have a special regards to Egmore that way. So you being the chairman of Egmore, wishing you to go to Calcutta, right? Delhi, no? Okay, I remember 12 Sardar Street very carefully. Okay, so coming back to income tax bill, old wine in new bottle. Simplification guided by 3 principles. What are the 3 principles? Textual and structural simplifications. You will see what it is meant by. No modification of tax rates. The entire tax rates have been the same. Okay, and then no major tax policy changes. even the tax policy changes have been the same. So what do I mean by the tax policy changes? Policy continuation. In fact, the moment I thought when the new bill came, I thought the section 80 will go, all the deductions which are otherwise available will go. Now the new regime is there, which means old regime will continue. Although new regime is going to be a default, I mean that already we know. So new regime is going to be a default regime which will continue in the B also. A is for act, B is for bill. So in the bill, new regime and old regime will continue. 5 heads of income. What are the 5 heads? Salary, income from house property, business, capital gains, business, and other sources. So these 5 heads of income will continue even under the new bill. No change in residency laws. In fact, some of the newspapers which talked about in the month of February when this bill came, they were saying that some residential status will change because of the new bill. The answer is absolutely no. There is no change in the residential status, no change in the ITR filing deadlines, income tax slabs and capital gains. So if you remember last 2-3 years, they have done lot of changes already in the Income Tax Act, and all those changes will automatically come in the new bill, and there is no change from what is already there in the act to the new bill in terms of any of the policy matters. Tax audit for the moment is still only with the accountant, and accountant is still only a chartered accountant. Okay, I don't think I'm carrying a good news as that subject is concerned. Section 2, subsection 1, all these days under the act was defining advance tax, and section 2, subsection 1 of the new bill starts with the definition of an accountant. Okay, on this podium, being a CMA Gururaj Acharya, I can only say that let CMAs also be let in. Okay, so section 2, subsection 1 for the moment talks about only a chartered accountant, but I heard Mr. Venkatramana talking about the special audit under section 142(2)(a) when it comes to inventory valuation is still to be done only by a CMA. So that is also there in the new bill. The various aspects of compliance for respective years mentioned in repeals and savings. So every act, in fact, our generation, sir, I'm sure Mr. Venkatramana should be senior in that sense, but at least when my son is here, from as compared to him, I have seen better transitions, from a no mobile to a pager to a mobile, and then from so many transitions of various kinds. But the important professional transition which happened from the 1956 Companies Act to the 2013 Companies Act, from the various VAT, they were talking about VAT, sales tax regime, to the 2017 GST Act. And afterwards, in fact, 2013 admele 2017 bantu. Now it is 2025. Somewhere in between also there should have been an act, and that act is again very interesting act called the COVID Act. That is another thing, nobody would have seen that in their lifetime. So 2020 we had the COVID, and then 2025 now we have the new income tax bill, the new income tax bill. So that way we have been transitioning. CA and CMA or CS for that matter, there is nothing supposed to be like a classroom teaching. We should not go through the classroom teaching, because whenever a new bill or a new act comes, you should read on your own and try to give your sense to your clients. There is nobody who will come and teach you. Maybe a person like me will come and talk to you for 1 hour and say that I have taught you income tax bill, but that is bullshit. Finally, you will have to derive your own reading and make sense out of the reading. That is why our institute does not encourage classroom teachings. It should be self-teaching and self-tests. So having said that, every act will have a last section will be on repeals and savings. What is that repeal and saving? We'll see a bit later. So we will start with what is the start and end of this particular act. How many sections does this particular new bill have? It starts with, of course, section 1 and ends with section 536. So what is this 530? Section 1 always talks about what is the title of the act, Income Tax Act 2025. The extent, it extends to the whole of India, including Jammu and Kashmir. Earlier we had a situation said excluding Jammu and Kashmir. Now it applies to the whole of India, and it commences from 1/4/2026. So the last section is 536, which talks about repeal. So which says that 1961 Act is gone, is buried. But it also has a saving. It also has a saving. What does that saving say? Various aspects of compliance for the respective years mentioned to be safeguarded, all the rights and liabilities accrued under the 1961 Act. So which means, suppose I'm going to have an assessment, 31/3/2026, whatever I file, will be 26/27 assessment year. 26/27 assessment year. So the return that I may file will be somewhere in July or September or October. So that particular thing, although the Income Tax Act is buried, 1961 Act is buried, that the provisions with respect to the assessments under the 1961 Act will still be saved. That means will still continue. So similarly, the refunds that you are supposed to get, or whatever rights that you have as a matter, maybe you have an 8-year loss, the losses under the 1961 Act carried forward for 8 years will also be stepping in under the 2025 Act. So as far as rights and duties or a liability, both from the department side and from the assessee side, will continue under this particular Act. There is one section 535. Every Act will also have a removal of difficulty. That means a removal of difficulty. In case you see that some word, sometimes there will be or instead of and, or vice versa. So which altogether gives a different meaning. To make such changes or any change which requires the intervention, they will have a section called removal of difficulty. And those of you who are interested in reading the Act, right now in the Act it will be section, and in the bill it will always be called as clauses. Those of you who are very particular, clauses. Once the bill becomes an Act, then the clause becomes a section. So removal of difficulty clause is right now there in the bill, and it will come in the Act also. What does this say? In case there is any issue with respect to the understanding or the making of the bill, then it can be removed by the central government without going to the parliament. Otherwise normally the acts have to be, again, if there is any change, it has to be changed through the parliament only, by taking the president's assent. So right now, removal of difficulty means the ministry, the finance ministry, can make the necessary changes through a notification, and then they can pass the notification and ask us to follow that with an effective date. And that notification will go to the parliament post. That means afterwards it will go. All rules, all changes in the schedules in the Act are like that. It will be through a notification which will go to the parliament after it is enacted. Just for information, you can say, so many things will come to our board, something for approval and from something for noting and something for information. So this will be in the form of a information coming to the parliament. So removal of difficulty through the ministry, and they have put a sunset clause. That means within 3 years, up to 3 years only, they have got this right to remove the difficulty. Afterwards, it has to go through the parliament only. So that is the start to end. So I already told you the income tax bill has become leaner. They have put it on a treadmill. So they used 3 approaches to take care of this. What are the 3 approaches? One is eliminate intricate language. They have removed, instead of so many words, they have made it very, very simple. Remove. In fact, one of the section which talks about section 43A, how to deal with forex rates, interest on forex fluctuation. So many words are used to explain in the Act. When it came to the bill, they said A into B by C. What is A, what is B, what is C? So maybe by making it very simple, we lose our practice. But don't worry, with every simplification, there is some complication. That's how I always believe in. So they have tried to eliminate intricate language, remove redundant and repetitive provisions. Lot of redundant and repetitive provisions have been removed, and reorganized the sections logically. They have reorganized the section logically. Instead of saying 269SS, 269ST, 269T, it's all one section, right? 269, 269, 269. So we have 3 269 SS, ST, T. So what they did is, now in the new bill, it is 185, 186, 187. So they have brought it down as a new number. So finally, what we need to understand as professionals is to map the old number and the new number. The provisions are more or less the 99.99% the same. between the two. And if it were to be in a complicated language, it has come down to a simple language. The best thing that they could have done is give it in the form of a PowerPoint presentation like this. Maybe in your life, after another 30 years, maybe all the juniors here in the student's life, in 30 years, the Income Tax Act, the bill of 2025, in 2075, let us say 2085, when it completes 60 years, it will be in the form of a PowerPoint presentation. That is almost tending towards that. Reorganize sections logically. I mean, you may be wondering, Acharya so nicely remembers 269 SS is 185, section 185 of the bill. I did not by heart this for this session. How I do logically is 185 of the Companies Act. You know what does section 185 of the Companies Act deal with? Loans to directors. So I immediately say loans to directors in Companies Act is loans under 269 SS. So that is 185. 185, 186, 187, 269 ST and 269 T. So that is how you will have to relate it for the benefit of the students. Then, so what has happened is there were 1,200 provisos. Those of you who have read Income Tax Act, you will see section 1023C provided that, also provided that, further. It goes on telling like that, and you will lose track. There are 23 or 24 provisos to section 1023C. So they've removed all of that, no more provisos. So there are 1,200 provisos in the Income Tax Act and 900 explanations, explanation 1, explanation 2, etc. So they have removed it with simplified content placed as subsections and sub-clauses. Then procedural aspects and specific details to be prescribed through rules. So most of the things have been put under either tables or schedules or through going to be prescribed through rules. Whenever they may say as may be prescribed, and benefit of the students, as may be prescribed means you have to see the rules. As may be provided means you may have to look into the schedules. So that is a distinction between prescription and provided. These are the words used in the law. So, and schedules as well as rules anytime can be given by the ministry and need not go to the parliament. So that is a change. So one of the important changes is ನಾನು ಹೋಗಿ ನಮ್ಮ ಅಸಿಸ್ಟೆಂಟ್ಗೆ 25-26 ತಗೊಂಬ ಅಂತ ಹೇಳಿದ್ರೆ ಅವನು ಫೈನಾನ್ಷಿಯಲ್ ಇಯರ್ 25-26 ತಗೊಂಡ್ಬರ್ತಾನೆ. ಸೊ ವೆರಾಸ್ ಇನ್ ಇನ್ಕಮ್ ಟ್ಯಾಕ್ಸ್ 25-26 ಮೀನ್ಸ್ ಅಸೆಸ್ಮೆಂಟ್ ಇಯರ್. Assessment year is 25-26, So always there is a confusion in the office, 25-26 ಅಂತಾರೆ assessment year previous year ಅಂತೀವಿ. So now they have put that to rest by using one word called the tax year. They have called it as the tax year. So what is the tax year? Tax year is nothing but the previous year. So right now what we are going through is 25-26. So 25-26 will be the tax year. If at all, if it has to be expressed in terms of assessment year, it will be assessment year 26-27. So the last time we are going to use the word assessment year will be assessment year 26-27. And next year onwards, we will be using tax year 26-27, which is that particular previous year. I have given a suggestion saying that instead of tax year, call it as income year. No, don't even say financial. Financial year is, of course, the concept which is used in the Companies Act, which could have called financial year also could have been a better year. Because financial year, they are more so focused on tax that they want to call it as a tax year. I mean, we are so focused as... Huh? I don't think so. Because the repeal and savings will say for that particular year you have to use those concepts only. So until 26-27, I mean that's why I'm saying assessment year 26-27 will be until that date you will have to use 26-27 only. So you cannot use the tax year. My suggestion to them was to call it as income year instead of tax year, because still tax year is slightly taxing. Income year could have been so much easier. Accordingly, please note this point. Accordingly, if you're reading the act, and so many newspapers, including the Taxman book, has made a mistake of saying they've got 1 year extra in so many provisions. For example, I will tell you, for reopening an assessment, there is 3 years and 3 months, or 5 years and 3 months. Whereas in the new bill, they said it is 4 years and 3 months, and it is 6 years and 3 months. So earlier 3 years, 3 months has now become 4 years and 3 months. Please note, earlier reference of 3 years and 3 months was with respect to assessment year. Now this 4 years and 3 months is with respect to tax year. So with respect to previous year or financial year, as you said. So therefore, there was no 1 year extra. It is the same. It is the same. Earlier it was 48 months. Now it has become 60 months. In so many provisions, you will see that. So 48 months from the assessment year, end of assessment year. Now it is 60 months from the end of the tax year. So therefore, there is no extra in that sense. That's why I said, accordingly, all dates linked to tax year instead of assessment year looks like there is an additional year in all places, but it is not so. I also given, and of course, one thing. So this is I think I asked my office to say which are the most oftenly used sections in Income Tax Act and what are their new numbers. Okay, so this is one for the moment a quiz question. I mean, it can only be a quiz question for the students, but otherwise, I will have it in the bottom of my table or my desktop and say that, I have to refer old as a new, or maybe I'll come out with an app. You should develop an app where I'll put the old number and the new number will come out. Finish. That's it. And the provisions are more or less similar and maybe less time consuming and easier to understand. So we should therefore welcome this particular act. 44AB is 63 because Ratri hot nanige epsbittu as a chartered accountant you say 269 SS and SS anta nedbidtini. I mean, that is the amount of relationship I and 269 SS or so many sections that we 40A3, 43B. Those are sections which we use, 48(2)B. So many sections which we use in income tax very oftenly. Now we'll have to rewire our brain, and therefore, of course, not very easy. I mean, not very difficult, but you need to have this in the back of your table. A couple of things like 115 BAC is now 202, new tax regime for individuals. Normally we say 115 BAC. If you are coming under a new regime, it is 115 BAC. It is now 202. Then 44 AD has become 58. Section 58 of the, earlier 44 AD, if you remember, 8%, 6%, turnover of 100 lakhs, going up to 200 lakhs, going up to 300 lakhs. Normally it can go up for 200 lakhs where you can go in for presumptive taxation. It can go up to 300 lakhs if your left side of your cash book is less than 5% in cash. So all these things were told in the form of words, so many words. In the new income tax bill, they have brought it as a table. They have brought it beautifully as a table. Similarly, 44 ADA, specified professionals, 50% up to 50 lakhs, can go up to 75 lakhs if your left side is less than 50%. Again, therefore, they have brought in the form of a table. Section 28 charging section, section 50C, the most popular guidance value of your immovable property is now 78, 56 to 10. Interestingly, section 192 to 194, 192, 192A, 194, so many sections we used to have on TDS. Now it is only one section 393. All your non-resident payments, everything is under 393. 393 is a very, very cute section, very small. Then how did he bring all those rates and thresholds and to whom does it apply? They have actually made 5 tables for tax deduction at source for residents, tax deduction at source for non-residents, tax deduction at source for any person, and no tax deduction at source, and assessees to whom no TDS. So all these things have been brought in the form of a table under section 393. So more or less coming to a PowerPoint type of a presentation within the Act. So section 192 to 195 is now boiled down to 393. Similarly, TCS provision of 206C is now becoming 394. So these are the section mappings I already told you, 222E. And one very interesting thing is our chapter 6A. We had how many sections? In chapter 6A, it was always dealing at section 80. Section 80. ಏನು ಮಾಡಿದಾರೆ ನೋಡಿ, ಅಲ್ಲಿ 3 ಸೆಕ್ಷನ್ ತಗೊಂಡೋಗಿ 1 ಸೆಕ್ಷನ್ ಮಾಡಿದ್ರು. ಇಲ್ಲಿ ಸೆಕ್ಷನ್ 81 ಇತ್ತು. 80 has 80C, 80D, like that, 80DD. So many things were there. Now they have split it into 34 sections. 34 sections from 121 to 154 in 2025 bill. So ಕೆಲವು ಕಡೆ expand ಮಾಡಿದ್ದಾರೆ, ಕೆಲವು ಕಡೆ they have contracted it. In short, in totality, they have actually reduced the size of the bill. So let's go through a dissection of the IT bill. So I have put it for the sake of this session into 3 tables. One is project simplification. The other, wherever they have simplified, just for our understanding. Second thing is project improvement, wherever some changes have actually happened. And finally, there are certain errors in the bill. There are errors in the bill which may likely to be reversed. Likely to be, definitely we have made suggestions that these are wrong things in the act, in the bill, which needs to be changed. So project simplification. Project simplification is, if you look into the volume of the act, we already saw, for the benefit of the chairman, let me show you once more. Munche ee tara ittu sir, ee tara ittu, ಈಗ ಈ ತರ ಇತ್ತು. Okay, so what was a thick book has now become 50%. Don't show it to the client. Don't show it to the client, because he will say then 50% fees also. Okay. Now, volume of the act, there were how many sections were there, in this? Actually, how many sections for the students? Quiz question. How many sections were there in the Income Tax Act? 298 sections. In the Companies Act, we say 470 sections. So, Income Tax Act, only 298 sections in this. So, now in this you have how much? 536. We just now saw that, 536. Then how did it become 50% in there? That's what I told you. The section 80D, 80C, 80M, all these were considered as different sections in this. That if you total it becomes 819 active sections were there. 819 active sections have now become 536 sections. There were 47 chapters, now reduced to 23 chapters. There were how many schedules? 14 schedules, which have now become 16 schedules. 16 schedules. Then 18 tables have now become 57 tables. Okay, and words, 5 lakh. Today it's very easy, you put it and the word number, the word count will be given by the computer itself. 5,12,000 words have become 2,59,000 words. 6 formulas were there, and now it has become 46 formula. The 46 formulas are there. Totally 823 pages becoming 586 pages. With effect from 1/4/1962, the 1961 Act was with effect from 1/4/62. Similarly, this will be from reverse. 62 will become 26. 1/4/2026. Simplification in the language. So, what are the language simplification that happened? Notwithstanding anything. For the students, I always used to say, not understanding anything. Notwithstanding anything was not understanding anything. Yes, sir. Yeah. It will definitely pass. It is only Lok Sabha, sir. It is only Lok Sabha. Definitely it will get.
Has happened 3 times like that.
Correct. You are right. Alla sir. Companies Act, GST Act, structural changes ittu. This is only word changes, and it does not involve any change. GST Act change was something phenomenal. So many states, though, they had to converge. And Companies Act, there were certain structural changes which they actually made. There is no policy change. So therefore, it may not take that much time. I'm very, very confident that it will happen by. And they have stuck to the earlier timelines. So therefore, and the same finance minister, same prime minister is continuing. And they have to therefore stand by their words. Yeah. So notwithstanding anything in the entire act is now being taught as irrespective of anything. So common English. Then provisos replaced with subsections, complex and lengthy provisions with formulas, provisions related to common topic was actually scattered. The definition of accountant was in section 288 of the Income Tax Act. Now it is all different, all definitions in one place. And then various allowances with respect to the employees, was also scattered in so many places. Now all of them have brought under one table or one particular place. Now these are the 16 schedules. These are the 16 schedules that are there in the income tax bill. Starts with, of course, 1 and ends with 16. 1, I'm more concerned with the 2 to 7. 2 to 7, all those things which were earlier discussed, income not to be included in the total income. If you remember section 10, section 10 of the Income Tax Act talked about income not forming part of the total income. So all that Section, if you refer section 10, when I just made a note of it, section 10 of 1961 Act had 50 subsections in 107 pages. In this book, I counted 107 pages of section 10 exemptions. 10(1) agricultural income, say 1050, some various types of, including 1014A, popular house rent allowances, various deduction, various exemptions. We have been popularly taught that section 10 is an exemption section, section 80 is a deduction section. The difference between exemption and deduction is, in exemption, it will not enter income. In deduction, it will enter income and then it will get deducted. So that is the difference between exemption and deduction. So having said that, so section 10 of the Income Tax Act is now replaced with section 11 of the Income Tax Act. What was section 10, 107 pages, has come in half a page or less than half a page. Only this is section 11, that's all. So what does it read? In computing the total income of any person for a tax year, TY means tax year, get used to this, any income enumerated in schedule 2, 3, 4, 5 and 6 shall not be included, subject to fulfillment of conditions specified therein. So like that, they have given some more details. But if you go back to section, the schedules, from schedule 2 to schedule 7, you will have various tables. So the best part of this coming under schedule is that tomorrow, let us say 1.5 lakhs of 80C. Today 80C is not very popular. 90% of our assessees have moved to new regime. But even for those 10% of the people, let us say 80C is important, 1.5 lakhs. Earlier in the budget, we used to look at whether 1.5 lakhs, and we used to tell 1.5 lakhs should become 2 lakhs. Now it need not go through the budget at all. Anything which is a schedule, the ministry can just pass through a notification saying that from tomorrow onwards 1.5 lakhs will be 2 lakhs. Maybe they will not say that during a particular period, they can say, but it need not be through a budget speech. I heard the commissioner talking about the budget day, importance of budget day. For GST, it is gone. Similarly, for income tax also, it will now go. So that is the message that I wanted to say. So this is the schedule which talks about section 11. Here we have about 6 schedules. Then I was more keen about 123. 123 is section 80, whereas section 11 is the equivalent of section 10, exempted income. For deductions, you will have to refer section 123 again, which is coming in the form of a table. And section 6, schedule 16 is 350, permitted modes of investments or deposits by a charitable or religious trust or institution. If you remember, section 11(5) of the Income Tax Act talks about how the charitable institution should invest their permitted modes of investments. What was 11(5) has now moved to a table, a schedule in the form of section 30, referring to a schedule in schedule 16. Companies Act has how many schedules? Those of you know, schedule, how many schedules? 7 schedules. No, 470 sections and 7 schedules. 7th schedule deals with CSR. So we talked about this. Project simplification, form over substance. This is a normally accounting standard 1 talks about substance over form. And this is a thing that I coined for this terminology, saying that income tax bill is change in the form, but in substance there is no change. So again, going back, structuring of the words, running words. For example, it says if you take a loan by way of an account paid check, bank draft and demand draft, it will be considered as a violation if it is more than 20,000 rupees. Whereas now they said properly paraphrased A, B and C. Then section 3, previous year is now tax year. Assessment year is now, in so many places they have said subsequent to the tax year. Subsequent to the tax year means assessment year. And exemption we talked about. Deductions also we talked about. Consolidated provisions. What was earlier called as charitable trusts or institution, they have given a new name called the non-profit organization. So the entire Income Tax Act now is talking about NPOs. So charitable trusts or institutions will now be called as NPOs. Staff welfare deduction costs have all been consolidated into one section without any change. Now from the project 1 to project 2, what did I say? Project 1 was simplification. Project 2 was changes, real changes. Some things improved also. We will see that. Tax audit. Now, who is subject to a tax audit? 1 crore. We have 1 crore for all assessees, and for those assessees who choose to come under presumptive taxes, it can be 2 crores or 3 crores, or in certain cases it could be 10 crores also. If it is up to turnover up to 10 crores, you don't have to do the tax audit, provided both sides of your cash book is less than 5% in cash. Now, instead of saying less than 5% in cash, they said more than 95% of your receipts in specified banking or online modes. More or less the same, but then they have changed by saying, instead of saying less than 5% in cash, they said more than 95%. Then relative definition. Venkatraman sir, and what is the definition of relative? Shripadji, what is the definition of relative? I always keep telling this. What is the definition of a relative? No. Relatives in the Income Tax Act has been defined in 3 places, and 3 definitions are different. Section 2 definition of relative is aju baju, aage piche, upar niche. Aju baju is husband and wife, aage piche is brother and sisters, upar niche is lineally ascendant and lineally descendant. Now, this is the definition of relative as far as income tax section 2 is concerned. There is a section 56 to 10 ke liye. If I have to get gifts from my relatives, the definition of relatives is what you said, 22 or so, where it says aju baju, upar niche of aju baju, aage piche, aju baju of upar niche, lineally ascendant, lineally descendant, aage piche of lineally ascendant and lineally descendant. If I have confused you enough, so what I am saying is husband and wife, brother or sister of my spouse, then aage piche, brother or sister, spouses of my brother and sister, lineally ascendant and lineally descendant, brother or sister of either of the parents. So please understand, I can take a gift from my relatives. So which means I can take my brother of my mother. Brother of my mother is my relative, right? Brother of my mother means my Sodar Mama. So my Sodar Mama say I can take a gift. Can I give a gift to him? I can give, but will it be exempt? Will it be exempt? Because please understand, the definition of relative is one way. I may be related to him, but he may not be related to me. That is how income tax is built upon. You understand? So if I take a gift from my mama, it is exempt. But if I give a gift to my mama, it will be taxed in his hands. And this definition of relative, sir, now you will appreciate this, is so beautifully done according to the Hindu culture. So mama should give the gift to the Batija. The reverse is not true. If the reverse is happening, it is only on account of some book adjustment. That book adjustment is not allowed. So that is how you have to understand. ಈಗ ಏನ್ ಮಾಡಿದ್ದಾರೆ ಅಂತ ಹೇಳಿದ್ರೆ, so all please let me tell you that lineally ascendant, some of the courts have taken a view. Courts will actually, mostly the assessing officers, lineally means one line. So one line means your mother and it stops there. Your father and her mother. So father ke mother and father can be a relative, but maternal side in the grandfather of the mother is not a grandmother, or grandfather from the mother side is not a relative. Until somebody took an objection. When I said nonsense, in fact, if that case comes to me, I will fight it out and go to the at least definite tribunal. Sometimes the commissioner appeal is always, is from the department after all. So tribunal only there are 2 people, very sensible people, and definitely we can tell them, sir, your honor, without your mother's mother, would you be there? I mean, and for all that you know, she is the first person who has seen you. Before your mother also, it is the mother's mother who actually sees you, She is taking care of the mother, and therefore she is the first relative and first person who has seen me, and therefore, but sense has prevailed. Now in the act itself, they said relative includes maternal and paternal, lineal ascendants and descendants. So since we are on the subject of relative, for Companies Act, the definition of relative in section 2 is something very similar to income tax. Aju baju, aage piche, just upar, just niche. Those of you who are dealing in companies, you know that grandfather and grandmother is not a relative according to Companies Act. Now, why this definition becomes important? if the grandfather and grandchildren are also not related naturally, because if grandfather is not related, grandchildren are also excluded from the definition of relative under the Companies Act. Now, because they removed grandfather and grandchildren as relative, they brought in Aju Baju, Aage Piche, just upar, just niche, and they have also brought in son's wife as a relative in Companies Act. Daughter's husband is a relative under Companies Act. Now, why is this important? And 2-3 things I want to tell you. Son's wife is what? Daughter in law. Which law? No, not any law. In company law. So now you have to say, this is my son and this is my son-in-law as per Companies Act. This is my daughter and this is daughter in company law. So that is that in-law has come from probably there. Now, having said this, what is the importance of this definition? Now, under the Companies Act, deposits are a very, very important subject. What is deposit? Any money collected by the company will be a deposit, unless it falls into any one of the exempted categories. The exempted categories in a private limited company is money coming in from directors or relatives of directors. Now, if the director has brought in from his grandfather or from his mother-in-law, they may be relatives under 56(2)(10) for income tax purpose, but not for the purpose of Companies Act. And the violation of deposit rules under the Companies Act can lead to a penalty of 2 crores to 10 crores. So that is a seriousness. So the definition of relative becomes that much more important. Similarly, if this works against me, for the purpose from the point of view of definition of relative. Sometimes it helps me also. For example, I cannot be an auditor of a company where I am holding shares, even one share, or any of my relative is holding 1 lakh worth of face value of shares. So if the auditor has shares, he better transfer it to his grandfather or grandchildren, because grandfather is not a relative. Some relative planning. Okay. Now, DRP directions, earlier dispute resolution panel, DRP is that. So there are certain changes there. LDC, I don't know, people must be very familiar with the LDC, that is lower tax deduction at source. That means if I have losses and the other person is still deducting 10%, I can tell my officer to direct him not to make TDS or to make a less TDS. So what they have now done is, they have, instead of bringing in nil or lower, they have only brought in lower TDS. They have removed the word nil. So right now also they are not giving 0 TDS. Those of you who are dealing with that, they say 1% TDS or 0.1% TDS you have to do, so that the TDS is very important. TDS, sir, is very important, saying that if I catch hold of your tail, I will catch hold of the person. And there is this 206C1H or 194Q of TDS, which says 0.1% of your turnover you have to deduct. If you are having a turnover of more than 10 crores and the other person is having more than 10, if you are having more than 10 crores turnover and you are supplying something more than 50 lakhs to the other person, you have to make a TCS. That is removed from last year. But the person who is having a turnover of more than 10 crores, buying any goods for more than 50 lakhs, if he is making a payment, he has to make a deduction of 0.1% of the purchase. And if he does not make, we have seen in one of our cases, 0.1% coming to some 70,000-80,000 rupees. For not making 70,000-80,000 rupees TDS, he was caught in the assessment, 30% disallowance under 40A1A, leading to 75 lakhs of additional tax payment. So please be very careful, they're all interconnected. So lower tax deduction is now possible, but nil tax deduction cannot be applied for. Earlier, there were certain sections for which you could have applied for LDC. Now for all TDS and all TCS, you can apply for TCs. That's an improvement. Project improvement in section 148. Again, this is one of the serious things. We are getting notices, reopening assessments of earlier years.